What's up, everyone? It's Caddy with MoneyVest. Tomorrow is the big day. We've got the FOMC Wednesday, September 20th. I will be live during that time to cover not only the statement, but also the SEP. We're going to talk about the dot plot. We're going to talk about the speech from Chairman Jerome Powell. I will be live to cover the entire event, so mark that on your calendar. It's going to start at 1:30 p.m. Eastern, our live stream, and it's going to go all the way till 3:15 p.m. Eastern, so it's going to be a longer live stream where we're going to discuss all of it. So hope you guys enjoy this video, find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, and of course our members only private videos and intrinsic value spreadsheets as well. Today was a record day for me personally because I ended up recording close to 14 videos, because a lot of them were course materials that I updated for our members, and these were bonus lectures that were updated for fundamental analysis, technical analysis, and I was also working on the psychology course. So it was definitely a very, very exhausting day to say the least. And this right here were some of the videos that I updated in our course member catalog. So 4 brand new videos for fundamental analysis courses basically talked about the no-brainer buy calculator in relation to stocks, of course, the intrinsic value calculator updated with my free cash flow weighted average, 2 important investing disciplines, and of course our KPIs, and 46 things I look at when I analyze stocks from start to finish. And when it comes to options, I pretty much uploaded 2 new tutorials and lectures that's available to all the members on implied volatility and of course mistakes to avoid at all costs when selling options. All that is going to be available for all of you if you are a member. Again, link's going to be down below if you want to join our fundamental analysis, technical analysis, options courses. And of course, at the end of September, we've got the new psychology of investing and money and philosophy of life course also coming out later this month. I'm super excited for that one. I also pointed out this right here was a survey that was done. I mentioned this in our Discord as well, and this was a survey just came out, and read it and draw a correlation with my 2 videos that I posted from yesterday. This was again yesterday, the day before, and the main premise for this is that the consumer spending is now starting to slow down. Okay, it is not only slowing down, it is also shifting to necessities, right? Necessary items. In other words, non-essential spending is going down, and excess savings of over $2.1 trillion have almost all been depleted, as mentioned in the Beige Book from the Federal Reserve as well. And this shift in the consumer spending could start to lower earnings, which could start to lower profitability, which could start to lower hiring, rising unemployment, and rising delinquencies as well. Of course, this hasn't happened yet, but something to keep in mind and watch closely. So this was literally yesterday. Americans plan to continue cutting back on spending throughout the all-important holiday season, according to a poll fielded on behalf of CNBC by survey company Morning Consult. And the vast majority of adults, 92%, said that they have reduced their spending over the past 6 months, and looking ahead, more than 3/4, 76%, said they plan to cut back on spending for non-essential items, and 62% expect to cut back on essential items sometimes or more often over the next 6 months as well, according to the poll. So that's, a pretty significant, numbers, 76%, 92%. These are significant percentages of people expected to cut back on overall spending, not only on non-essential items, but also on essential items sometimes and more often as well. So something to keep in mind, because that's obviously going to be affecting earnings and potential hiring. Now, speaking of hiring, Amazon announced that they are going to be hiring 250,000 employees for the holiday rush. That is a crazy amount. I think that probably was one of the reasons why Amazon was selling off pretty aggressively today. So, it was down a little bit over 1.6%, but then of course got bought up fairly quickly, back up to 137. But at one point, I think it was down a little bit over 3 to 4% on the day, so definitely selling off quite a bit. We did have Enphase rally quite a bit, 4.2%. I've been dollar cost averaging into Enphase. A lot of our members have been doing it, and right now it's sitting at 122. It's literally pinpointed inside that good deal green rectangle. We'll talk about that in just a minute, but Amazon definitely hiring quite a few people here, 250,000 employees for the holiday rush. So they are definitely expecting a lot of sales. They're definitely expecting very, very busy holiday season. So we'll see how that ends up playing out, but that's a lot of people. Now, speaking of interest rates, now tomorrow The Federal Reserve is expected to keep rates steady at where they are, 5.25 to 5.5%. There's about a 99% probability. It's pretty much a done deal at this point. And the market is expecting them, in other words, the Federal Reserve, to keep rates where they are, higher for longer, and then cut rates 3 times in 2024 to bring them down to 4.5 to 4.75%. That's really what the market is pricing in. And another really big catalyst in this news, U.S. national debt hits 33 trillion for the first time ever. So the U.S. national debt reached a historic milestone by passing $33 trillion for the first time. And the level was reached less than 2 weeks before the federal government faces a potential shutdown over the lack of funding authorization. And the issue of the debt is at the center of a standstill in Congress over a spending bill that would sustain the government until the next funding cycle as well. And, we've done several videos on this topic. I've talked about this extensively on the channel as well, talking about the interest on the debt, talking about, the amount of fiscal issuances with the fiscal department, the amount of issuances of new debt, and of course the average interest rates that's been going higher, the breakdown, the tax receipts, what percentage do the tax receipts make up the overall spending. We talked about all of that, and Ray Dalio's talked about it even more extensively. So, it is a problem. It is just we're kicking the can down the road. So of course, eventually we'll figure it out. But let's just talk about tomorrow first. Then we'll talk about the next 10 years. Here's everything the Fed is expected to do Wednesday. Okay. So tomorrow, again, the Federal Reserve interest rates are expected to stay unchanged. The dot plot may change with, somewhat of a very, very close focus on whether we're going to see another rate hike or not. But this right here, Gus Fosher, chief economist at PNC, says, and I quote, "I think that they will keep the bias towards higher interest rates in there and indicate that they are willing to raise the funds rate further if the data start to show that either inflation is not slowing as expected or the labor market remains too tight." And I think that's really what's going to end up happening. It's going to be 10 to 9 or 11 to 8 or something like that, where there's going to be a close call between majority of members still expecting one more rate hike for 2023. And we'll talk about the dot plot tomorrow in the SCP as well. Now, Summary of Economic Projections also is going to give us some estimates on the outlook for rates, inflation, GDP, and unemployment. Now, interest rates are going to be probably the most important piece because that's the only thing that the Federal Reserve actually does control. Everything else is out of their control. They have no control over inflation, GDP, or unemployment. It's only an estimate. But interest rates is basically what they control and what they can actually change the course of. So SCP, very important. The last one we got was back in, I believe, June. The statement also is going to come out. There's going to be some changes in the overall wording. There's going to be some changes in the overall tone and what they're planning to do. So again, all of that covered tomorrow, 1:30 p.m. Eastern. I will be live for everything. So markets very, very flat. There's not a lot of movement. This usually happens right before, big Fed meetings or earnings or other economic data like inflation numbers. But overall, we had Microsoft flat, Apple very flat. Amazon at one point was selling off quite a bit, but then pushed higher. Tesla was up, Meta was up, Google was flat, Nvidia was flat, Qualcomm was flat. So most companies were very, very flat. Didn't really move much. This right here is, again, the entire market. All sectors were red except for healthcare, which was slightly higher. Comm services were flat. Over the last 1 week, utilities is the big winner. And over the last 1 month, again, comm services, energy, cyclicals, financials, all these sectors pushing higher, with healthcare, defensive, and industrials is selling off. Lean hogs pushing up, with sugar, coffee, and wheat prices also rallying a little bit. And we did have crude oil, ethanol, lumber prices, natural gas pulling back after a very, very strong rally. Bitcoin back over 27,000, Ether back over 1,600 as well. So there's some momentum coming in for crypto. So going over to Bitcoin again, 25,000 is going to be that support. So this right here is going to be that level to watch for BTC, and of course resistance is going to stay put at 28,000. So this right here is going to be that level to watch, and right now we're just consolidating sideways in that range for quite some time. And right now there is again some talks about that spot ETF for Bitcoin from Grayscale, which if approved, there's definitely, in my opinion, going to be a lot of liquidity that's going to drive into cryptocurrencies through those ETFs that are going to be launched. So I think that's really what crypto investors are, for the most part, waiting for. But resistance is going to stay put at 20,000, support at 25,000 at the moment for Bitcoin. Ether here, on the other hand, support level is going to be at just a little bit under 1,600. Resistance all the way up to $1,700. So that right there is going to be a lot of consolidation. And That's really where we are, consolidating sideways. It's just funny that I was just thinking about a meme in my head related to cryptocurrencies. I was watching this channel. It's called Low Budget Stories. And man, those videos are incredible. There was one specific video on cryptocurrency that kind of I'm remembering right now because it's just way too funny. It's a meme on cryptocurrency where this guy basically says that I was up like 250% on an altcoin, but while I was sleeping, it literally went down to zero. And that usually what happens when cryptocurrency, when you're trading altcoins, when you're trading cryptos, and you're trading in projects that are not validated or not really that authentic. They can go up like 250% and then go down to 0% in a matter of just few hours. But of course, Ether and Bitcoin are a lot more established, a lot more validated. Of course, they've got the reputation they have. So Ether here, 1735 is going to be that resistance support level at just under 1600. Now going over to over here, crude oil starting to see a bit of a pullback. So we talked about a resistance at close to $93, and looks like we got up to as much as 92.53. So this is not a surprise why we're starting to see a bit of a pullback here. Again, RSI overbought, price action getting up to that resistance. So again, these levels are no joke, right? The levels that we have on the technical analysis are no joke. These are validated levels. We're talking about proper, very, very structured support and resistance levels. And guess what? As soon as it got up to $92, $93 per barrel, we're starting to see a bit of a pullback on crude. Volatility here, on the other hand, was consolidating sideways, so it was a little bit muted, still trading back above 14 levels and up over 79 basis points. Now coming back over to the S&P 500. So this right here is going to be the S&P and the NASDAQ. So what we are seeing at the moment is still inside this downtrending channel. So right now for the S&P, we're still very much in a lower high and lower low pattern. We were selling off down to 4,400, but then the buyers basically stepped in to push us back. So intraday, we did see a lot of momentum back higher, but a more important support is going to be 43.35. And of course, we'll find out what the Federal Reserve ends up doing tomorrow and whether we see some momentum back up to retest this lower high that's going to be sitting roughly at 4,500 on the S&P. Talking about the NASDAQ, same thing. It is still trading inside this downtrending channel, so we are still very much in a lower high and a lower low pattern. Support level is going to stay put at roughly around 13,000. Very, very important level to watch. And a resistance, of course, at this lower high. To as much as these 14,000 to as much as 14,400 levels for the NASDAQ as well. So those right there are going to be some levels to pay attention to for NASDAQ and S&P going into tomorrow and of course later this week. Talking about Apple first. And Apple here getting bought up on the day, up a little bit over 62 basis points. So still very much in the context of this lower high pattern. So there's a little bit of a descending triangle. And of course, we've got this as a green rectangle for Apple as a strong support, in my opinion. Of course, we got those lower highs coming in for Apple as well. So next resistance is really going to be at closer to $187 per share. For Apple, that's going to be that lower high, and of course, support level that it's bouncing off of is going to be at closer to 175. A lot of it kind of hinges on tomorrow because a lot of companies are trading in a downtrending channel, lower highs and lower lows. So tomorrow, of course, will dictate whether those patterns kind of materialize, and we continue to see that downtrending channel form, or if we are going to see a breakout to the upside with the markets kind of reversing back and putting us on the map to potentially trading back up to all-time highs. So tomorrow, very, very important day, and that's really what's going to dictate how the markets trade and where the direction ends up going. Talking about Amazon, Amazon is actually one of the very few companies that is still very much in a uptrend, making higher highs and higher lows. In fact, it got bought up from that confluence of that support at roughly around 136, 137. So not only do we have some higher lows coming in for these buyers, but we also did have the horizontal support over here from Amazon. So some buyers, of course, stepping in, but it has still been selling off over the last 2 to 3 days. It is down a little bit over 6%. So again, we'll continue to monitor whether this support validates or if it starts to break down even further. So that's going to be that level of 137. Talking about Tesla, and Tesla here also getting bought up. Man, that's just crazy. Look at the low for the day, 261, and the support is 260.94. So buyers are present at those prices. This again, these support resistance levels, they are like to the T. Like again, this is not a flex, but these are very important levels that we validate. Very, very nice. You can see the previous resistance level literally acting as a support, not once, but now twice, and buyers stepping in at those levels. And Tesla right now trading very much in a staircase pattern type, trend overall, because it's been pushing higher, consolidating, and then breaking out, consolidating, and then breaking out, consolidating. Then if a breakout happens, and of course we're looking at 280, 285, 290 levels for Tesla next. But huge resistance here, 277, support here at 260, 261, and right now is just consolidating sideways in that range in the context of a bigger downtrend that we have right now going on. So lower highs and lower lows still forming for Tesla. Talking about NVIDIA here. And NVIDIA on the day also just really consolidating sideways, down about 1% on the day. Next support really is going to be $401 per share, as I've already pointed out. We've got that negative divergence forming for NVIDIA, and of course we've got a gap to fill roughly in the 320s and 360s for NVIDIA as well. Resistance is going to stay put roughly at around $500 per share, with a support level, like I said, at $401 for NVIDIA. Talking about Advanced Micro Devices and AMD here, still in the context of this overall downtrend, so making lower highs and lower lows, and just consistently trading in that range of lower highs and lower lows, and support level is going to stay put at roughly $99, close to $100 per share for AMD. So that's going to be the level to watch. I've already started a new position at AMD. We'll be adding more shares in the $80 to $60 range, and we'll be looking at selling some puts in Advanced Micro Devices down to those levels as well. But support level is going to stay roughly around $99, close to $100 per share. It is really reluctant in dropping down below $100 right now. PayPal here, on the other hand, down 1%. So again, most stocks were obviously red on the day, so PayPal is no different. Selling off a little bit. We're still very much consolidating sideways in that range. We've got a huge gap to fill in the 60s and 70s. And of course, resistance is going to stay put roughly here at $69, $70 per share, with the support level staying put at $57, $58, and right now we're right in the middle of that range. Square struggling quite a bit, starting to break down below $50 per share for Square. Unfortunately, as I've already mentioned, the next true support is going to be at $34.50, although I don't expect Square to come all the way down to that level. I do expect buyers to step in somewhere in the middle of that range, but this is, again, a very significant breakdown for Square below $50, which hasn't happened in a very long time. So if you go back, last time it happened was during the pandemic, right? March 2020. So it's been a little bit over 3 years that Square hasn't traded at sub $50, right? So it's a 3-year low for Square, trading down to over $50 per share. And this right here will actually turn into a resistance now for this company, unfortunately, because it is trading below that level at the moment. Talking about Meta Platforms now, and Meta here still pushing higher, back over $300. So this right here is going to be that support that we have talked about. There is still a little bit of those lower highs coming in. So we've got that lower high formation with that lower low. So still very much in a downtrending channel. And again, tomorrow really what's going to dictate where the market ends up going from a directional standpoint. But support level is going to stay put at 300 all the way down to $257 per share for Meta. Talking about Netflix, and Netflix here also getting some momentum back up, considering that it's been selling off pretty aggressively. We've got almost an oversold RSI and a MACD, so this right here is actually going to turn into a resistance now. Support level is going to stay put at $380 for Netflix at the moment, and resistance all the way up to $398 to as much as $452 for Netflix. Talking about Google, and Google here down about 9 basis points, so very, very flat, just a little bit over 138. Slowly and steadily, it's making its way up to resistance at 144. I will also point out something that I mentioned in my other videos from a technical standpoint. It is coiling in with a rising wedge pattern. So this right here is a little bit of a rising wedge where it's just consolidating, pushing higher, drifting higher, which is good, but it's also kind of doing that at the expense of a negative divergence, lower highs on the RSI, and of course, coiling in slowly and steadily with weaker and weaker price action and momentum at the moment. So resistance next is going to be 144. Support level is going to stay put at 132 down to 127 for Google. Microsoft here, on the other hand, still very much in the context of a downtrend, so lower highs and lower lows. Support level is going to stay put at $313 to $314 per share for Microsoft. And of course, we got a resistance sitting roughly at $351 per share for this company, and we're still very much in the context of this downtrend. Again, like I said, lower highs and lower lows. Support level is going to stay put at $313. Enphase had a very nice rally back higher, so we did come down to that good deal area. I did dollar cost average yesterday and the day before, and the fact that it's been selling off inside this green rectangle. Resistance is going to stay put at 128, so this right here is going to be that level to watch. I do think that this is a very, very overblown move. It's just, been sold off pretty aggressively. And of course, the valuation has come down pretty dramatically as well since the prices are coming down. So right now it's trading at just under 30 times earnings, which I don't think is the case for forward basis. Like if you take a look at earnings expectations at $5.05, 122 divided by 505, we're looking at a valuation of about 24, right? So that's even lower than 29. If you look at it on a 2024 basis, 654. Right, so if you do 654 instead, we're looking at an 18.6 times earnings multiple for a company that ends up maybe growing earnings, let's see, 505, by 29%, right? So here's the thing, earnings are expected to grow by 29% and the stock's trading at an 18 times multiple. You decide. You make the judgment whether it's undervalued or not. But I do think so it is. So 122, it's still a reasonable price. Of course, ideal would be low 100s. That would make it even more sweet of a deal. But this right here inside this green rectangle, I would love to, slowly and steadily dollar cost average a little bit more. And last but not least, we got Shopify. Shopify here continues to sell off down almost 2%. Support level is going to stay put at $54. Resistance is going to be 66. Lots of consolidation sideways in that range for Shopify at the moment. So hope you guys enjoyed this video and found it helpful. Tomorrow is the big day that we need to be prepared for. So we got lots to unpack during that day. Not only do we have, the FOMC, the press conference and the speech, but we also have the SEP. We've got the statement. We've got lots of things to look forward to when it comes to tomorrow. So be ready. Tomorrow's the big day, full of surprises. As always, happy investing. Make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. And also, fundamental technical analysis courses, options courses are available down in the description below with the link. And you can access them for a lifetime. And again, join our MoneyBest community as well with a 16% annual discount on the Patreon. So, as always, happy investing. I'll see you all in the next video.